Good afternoon, this is Tom Aspray with the Viper Report. It's Tuesday, November 2nd, Election Day across the country. In the last video titled, We Have Started Buying, Have You? I talked about how the technical indicators had indicated that the stock market was indeed bottoming. In today's presentation, we'll look at some of the technical evidence, most of which shows that this market's even gotten stronger since then, and what that may mean for stocks as we head into the end of the year. There are a couple of warning signs that one needs to be aware of and needs to use that in their strategy in order to take advantage of the traditionally bullish activity in November and December. This chart is as of the 18th of October. You can see the S&P 500 AD line moved back above its moving average, overcame those peaks. The stocks only was in a clear uptrend, and the NYSE All AD was even stronger. If you go forward 2 days to October 20th, you can see that the stocks only has broken through this resistance line C, and more importantly, the NYSE All AD line has broken out of this major trading range that goes back to the start of June. S&P had not yet broken out to new highs, but it was rising strongly. This chart is updated as of the close on Monday. There were some slight divergences after last Friday between the NASDAQ 100 and some of the other AD lines, but those appear to be resolving now. As you can see, the stocks only AD line has turned up sharply. The most broadest measure of the market, the NYSE All AD line, shows a very bullish pattern, though midday Tuesday the AD numbers are slightly negative, so it'll probably pull back sharply, but the combination of the breakout and this pattern does indicate that the market is voting for stocks to move even higher based on the technical studies. The S&P 500 is very close to making a substantial new high, and probably will this week. Adding new positions in either the SPY or the QQQ seems to have too high a risk here, however, so one needs to look at all other alternatives. The summary table as of last Friday's close shows that the SPY was at 459.26, not far, just 1.5% below the weekly Stark band at 466.35. That gap has narrowed this week as the SPY has hit 461.76, and the QQQ was also just 1.5% below its Stark band. It's narrowed that gap even further. Another sign that the market is not as strong as it was back in May and June when the new highs made this surge above 700 is that the new highs have not expanded on this rally yet. Right around 209, made a slightly higher high here, but still well below the levels, say around plus 300 I'd like to see. New lows, are low, but they're not that low. You can see what happened in June. Looking back in past videos, that was when all the AD lines flashed very bullish signs also. Very few number of stocks making new lows in contrast to the number of stocks making new high. That was a much stronger signal. So that is a sign that one still has to be selective here, and chasing prices could put you on the wrong side of a 1 to 2% correction. I think we'll probably see at least one, if not more, in those before we head into the end of the year. One of the ETFs we focused on last time was XLY. You can see it accelerated the upside since the middle of October, gone from about 184 up to a high of 204.88. Still looking positive up here. We had a quick 6.5% profit in less than 2 weeks. We took half the position off just as a risk management. We thought we might see more of a pullback, but no regrets. And we're riding the rest of that position up. If we do get a decent pullback, you can see the pivot here. We're trading right now at 203.50. The pivot is at 193.88. Probably unlikely we'll get that low, but we could get down into this 197, 196 area. If we do, I'll look to add into that position. It's been a interesting 6 weeks for the relationship between growth and value stocks. This is a ratio of using the S&P growth index, the IGX versus the IVX, the value index. You can see we talked about it in one of our videos, really nice bottom here in June. Topped out here, came back, into September. This was a value play. Banks were really strong. Pulled right back to the 20-week EMA. Since then, it's been straight up, and as of last week, we broke out of this trading range. That's suggesting that value still has legs going into the year end. MACDs are positive, but diverging. So a look at the daily chart shows that in the IWD, hang on, we'll look at that one. Looking at the ratio between IWF, that's the Russell 1000 Growth ETF, and IWD, you can see we just hit back to this resistance on Monday. We've turned down slightly today. MACDs are, positive. We broke this downtrend here, so it'll be interesting to see if we get a pullback here. Look for a potential breakout to the upside. That's what the weekly indicators would favor. If we drop back below this low, that would suggest it's going to be more choppy in the growth value space. But this analysis does give a slight shout to growth over the near term. If you want to know who's doing what in any given day, you can just type in any website, IWF, and you'll see how much it's up or down versus IWD. We've been making a number of stock recommendations. One of our favorites here was Fluor. It's had a great run down from, you can see we came down here into the pivot. This is the spread between the closing price and the 20-day EMA. Just got a nice little bottoming formation here. We took, I think it was a 12% or some profit off around 1835. Looking to let the rest of it ride. We have an order in to sell it at 2066, or we did going into Monday's session. We got a little short of that, but we're still, OBV looks strong. Bank of Nova Scotia also had a very nice bullish formation here. We had a nice run to the upside. Sold it out last week right in here. We've had a pullback. So I'll watch the value growth and see if we get back into this support level. Maybe a stock we'll look at it again. So we did put out a special update this morning, Tuesday. Had a new recommendation for an ETF based on Monday's strong action, and also made a new stock recommendation. So if you want specifics going into the end of the year, go to viperreport.com and click on either the Viper ETF or the Hot Stocks Report. Each is $34.95 a month, and it'll put you on the list immediately. The next regular updates are scheduled for Thursday. As always, please send me your feedback at tom@viperreport.com. Thank you very much.